Traders, what's going on, guys? Cleveland here, and it's time for another Monday market breakdown. Decided to come to the roof today in the office. Can get a little dreary down there, right? So, why not get some fresh air? And for the past 2 weeks, no breakdown last week, right? But we're going to be pretty consistent for the next month. And for the next 2 months, because folks, we're crossing over to the second half of the year, and those always have heavy implications on the capital markets, right? So, what I want you to do, because what I've done was I surveyed the past 6 months, and I've really just thought about where I've gone business-wise, where I've gone trading-wise, what kind of things have I implemented in my life within the past 6 months that have helped me scale, right? So you can always go back and say to yourself, okay, what did I do last 6 months, and did I go anywhere, and compare it to the prior 6 months to that. And what you can notice is if you do the same things in one 6 month chunk that you did in the past 6 month chunk, you usually don't see any kind of growth. Okay, so a metaphor that I like to use is you never change your life until you change your routine, right? So you got to start implementing things into your daily routine, into your daily life, and then that's when you can actually see some true growth within some kind of span of time. And when you're first starting off, folks, in anything when you're first starting off, things can happen pretty quick. Okay, you usually start to get this exponential growth and this really nice curve. I was gonna say equity curve. It's really nice growth curve, and then things start to slowly tinker off a bit. So that's why I do things in 6 month chunks, but you could definitely do things in 3 month chunks, 90-day rushes, see where you can get in your life, and then boom, just keep scaling, keep scaling, keep scaling, okay? I want you guys to do the exact same thing when it comes to this, your FX business, when it comes to your lifestyle in general. Things can move pretty quick, okay? 6 figs, 7 figs, those worlds, the people really aren't even executing at really high levels that are able to generate that kind of income in anything they do in their life, right? So it's just about making the right decisions and about implementing the right things in your life day in and day out. So I'm about to start traveling over the next couple of months. I have a pretty crazy trip coming up in October. I'll probably be in Colombia, for a solid month and a half. We'll see, month to month and a half, so we'll see. But other than that, guys, let's kill it for the next 6 months of 2017, and it starts with some analysis. All right, some analysis for this week. If you haven't seen the breakdown I did with the manager at the firm, I'll just put it in the suggestions above here, and then you can just go check it out. It'll loop you right over there. It was pretty good. We went in depth over the past 6 months, looked at the equity markets, and we did some foresight as well, okay? So for this week, we did have a durable goods number that came out. Consensus was 0.2 or 0.5. It came out a little bit in the red, but nothing too jarring, right? So we didn't actually get any kind of real market movement with that number. But right, we're nearing the end of this month, and we got the first week of next month coming up, so we're going to have a lot of fundamentals. So right now, folks, the way things are adding up structurally for the euro, for the Aussie, for the pound, and for honestly the NZD USD, I am looking at it. I got stopped out on the NZD trade last week, lost about 500 bucks, but that's the game. But it does look like it could definitely be a solid short. All right, so that's something that I'm looking out for, and that's what I want to go into when it comes to the fundamentals. Okay, euro, if we get some sell side weakness for this US dollar, then guys, we're going to shoot straight sell side, and we're going to actually have some real profit to the low there. Same thing with the Aussie. We've been holding these highs, and I'm telling you, a lot of these highs have been held on the precipice of things adding up well for the EU. As you guys know, we've had those 2 extensions up, one being because of the Macron election. I'm talking about the EU. And the second being because of some of the investigations, and I think actually some more momentum coming in for that Macron election, okay? So we've been hanging up here in the range of these $12s, but folks, if we get any kind of US strength, it'd be nice. It'd be nice to get some US strength, because we're at this 23.6 on this huge monthly yearly fib. I'll show you guys in the chart. Any kind of US strength, it'll be a very beautiful short. So I would love to go short this week on the precipice of US strength. On the euro, I would also like to see that on the Aussie. And for the pound, though, we came down and we've sat right here on this massive level. We really got to see something happen there. Obviously, we get U.S. strength. That's going to be kind of counterintuitive for any kind of buy-side move, any kind of sell-side move on the pound, but anything can happen. Pound does look like a buy, so technically, if you want to get in on some kind of buying opportunity, that pound might be it. There was also the AUD NZD. My buddy Jesus pointed that out. You've had 2 huge extensions down, one extremely substantial, the next is a little bit more of an intraday play, but both are sitting under a very, very tight retracement level, all right? So if we get, again, any kind of strength coming in for the Aussie, for the NZD, or any kind of weakness coming in for the Aussie, then we can start getting some pushes up to the upside. We might be able to get in that trade, okay? So very quick on the fundamentals, all right? We got a lot of it coming out next week. We do have a little bit more numbers coming out this week, And so we'll kind of talk about that. We'll kind of survey that while we're in the charts, and then we'll move forward. Okay, so guys, sell side strength on this US dollar. Let's hope we can get some. And if we don't, then let's look for some buy side strength on that pound. We can ride that thing back up. Pound has been probably the most volatile pair all this year, right? So it could easily start ripping back to the upside. It only took 2 moves to break that consolidated high. Go back to my last breakdowns. I've been hating that level because it was just so ugly and markets were just really sporadic. The second we get the rip outside of the level, we're already down to, you know, that next structural area. I'll see the actual price point when I pull over into the charts. So again, folks, if you got to be there for the opportunity. This is a real business, and guess what? In business, opportunities come and go, right? In life, okay? So if you're not there analyzing, surveying markets and surveying market structure, potentially with pending orders and whatnot, then you're just not going to get in a trade. I talked about that yesterday in our Top Trader webinar, okay? So by the way, guys, as always, if you want to get in our free live room and get in our free chat community, so it's kind of for like the rookies, take the rookie course. All right, it's right there. So other than that, guys, I'll see you in the charts. Let's see what we got on this euro, Aussie, and pound. All right, let's check out the charts. I'll give you guys a little bit of an update. It is Tuesday afternoon, and we've already started to get some market movement based off of a lot of the central banks. Right now, they're talking to the IMF, International Monetary Fund, and man, we have seen some really volatile price action in the past couple of hours. So right now, euro is up $1.14. They mentioned that we should stay in this range, and and I do agree. We might have some wick outs, and that's what we're seeing right now. But at the end of the day, we should stay in the range. Only reason that we won't stay in this range right now is if Yellen is dovish. Okay, she's head of the Fed. We've had Fisher speak, we've had Hawker speak, or Hacker. And as of right now, Hacker, he wants another interest rate. He can see one more interest rate coming before the year's out. Remember, we've had 2 so far, right? We've had one in March and we've had one in early June. If we have a third, then, we're kind of staying on schedule in terms of how many rate hikes there was going to be perceived to be for 2017. Okay, so as you can note here, a lot of volatility. And this has less to do with what's happening on the US side. This has more to do with, okay, this is the Euro USD, right? So Draghi has been speaking all morning, and he's been mentioning how he could start seeing a decrease in asset purchases, okay? So bond purchases. So right now what they're doing is they're doing quantitative easing, all right? And what that means is basically they're buying up different bonds, and they're putting this money back out into the marketplace. And interest rates obviously right now very low. And so folks, what that's doing is that is decreasing the value of the currency. Well, he wants to stop that process, and if he stops that process, then what you're going to see is you're going to see an increase in pricing for the Euro USD. So that's why we've just pushed up to the $1.13s. If they stop quantitative easing, then we could definitely see this thing as projected up here in these highs. But remember, guys, we wanted to get a little bit of a sell-off, right? Because when we look over onto the monthly, what I was mentioning was this was the level, the substantial level here. Let me delete some of these things off of the chart. That was the substantial level that I was talking about. Okay, so we've been up here at this impenetrable 23.6% Fibonacci, which is the $1.13s, high $1.12s, and we have yet to really break out of it. Okay, there are certain times where we may get some wick outs and we kind of closed out a little bit here, but other than that, folks, it's been a very headstrong level, right? So I definitely think that over the next couple of months, over the next 6 months, man, there are so many things fundamentally that could push us outside of this level here. And, as of right now, you have a lot of the stronger economies in the European Union, Germany being the front runner. They want a stronger euro, okay? They're not getting the bang for their buck on the exports that are going out of the country. All right, so again, the higher the currency, the more purchasing power. And right now, Germany feels as if there isn't enough purchasing power, which is very interesting. So as of right now, we do see a lot of volatility. We're going to see how this adds up, for this Euro USD. But we're really just going to have to see how this day closes. Okay, so what we're waiting on right now is Yellen. We've had Fisher talking all day, all afternoon here, early noon, and we're going to have Yellen speaking a little bit later on, so I'm sure the video is going to be over by then, but just kind of stay up on your charts, or if you're watching this at a later date, go back, look at what's going down on June the 27th and see where we ended up, all right? But if Yellen is hawkish, then we could get a nice little pullback here, okay? But if she's dovish, and she is known as the more dovish person in the Fed, then man, we could accelerate out, or we could hang around these highs and have some price action that really just sits up here, and then boom, we'll push out. So that's what we're looking at for the euro, folks. All right, so as I was mentioning, it'd be nice if we could hang out here, come back down to these lows, maybe have some sell side move. And I was thinking that we could get a push. But again, if these markets are as momentous as they look, then it's just not going to happen for us. All right, so let's see what happens with the Fed. If we may be able, if we get a close up here at these highs, we may be able to catch some short-term move, maybe tomorrow morning, for the U.S. session. We'll see, but it just depends on the amount of momentum, man. So we're just gonna have to really see how price action reacts around this level. Can you take a breakout long? You could, but I'm not ready yet to do that. I would like the pullback. If I see that the market's just gonna rip, then I'm gonna see how can I adjust. But I want to see how this candle closes today. It's a little bit too volatile. A lot of different speeches going on right now. I don't want to base my entry off of the current price structure. Okay, so for the Aussie dollar, notice no movement on the Aussie dollar, right? It's because remember, again, everything that's been happening thus far has been mostly been around what Draghi has said. Okay, so until Yellen speaks, we won't get any kind of movement. All right, so that's why I don't see anything happening to the Aussie dollar yet. All right, so when Yellen speaks, we're going to get some movement, and that will also affect this Euro USD. So that's what I'm waiting on. So Aussie as of right now as well, folks. You know where we're at. We're still stuck up here in these highs. A very strong level again, and it seems as if all these different assets, conversely to the U.S. dollar, have kind of creeped up to their highs. Okay, the only one that hasn't done it yet, it's kind of pulled off a bit, is the GBP, but we know why that's the case. Okay, the jolt election is having heavy implications on the market structure, and there's a lot of risk adversity over there in the pound right now. So you had a lot of liquidation last week. We'll go over and talk about that in a sec. But as of right now, Aussie same thing, right? So the level that I've always loved and that I've been talking about for, I guess, around a year now has been this here, and we're kind of sitting right there in there, okay? And so again, if we get any kind of U.S. strength, I don't think this being our base, I don't think that being our base would be too bad of a structural level that if we get a sell-off, stops could go up there at the high, and then boom, we could push down over. But again, I feel like that would just be so short term. I hate playing in the mids. It'd be nice if we could creep back up into the high, and then we could start selling off there, or we could maybe sit down around here at structure. I still think that markets, to the sell side, I still think there could be a potential little void here where markets could easily fill that. So if we get any kind of price action to that sell side level, then markets could easily float right back down to the 74.80s, and then maybe we can get our catch up. We really just have to see. But the market structure right now in the Aussie dollar is not so great. I do want to show you the market structure on the Aussie NZD. Or the NZD, the Aussie NZD. I love that market structure. That's going to be the Aussie play that I'm going to be in. So I would like this to be a little bit better. Not really there. Let's check out the Aussie NZD. We'll do that after the GBP USD, of course. So GBP USD is actually rocked. And remember what I was mentioning was the structural level where markets kind of fell down into. Okay, so notice we had this huge level down here that's obviously impenetrable, right? I mean, this thing is massive. This could definitely be where a lot of risk adversity to the sell side was going to come to fruition, right? And so you see that. You see a lot of liquidation happening right here at this level. If I show you what I meant earlier on this daily, look how quick we got there, okay? So once some of the polling numbers came out, and then once some of the different implications of the jolt election came out, man, we ran literally around 260 points down to this low here, okay? Came back up, retested this little structural level here, okay, where our base originally was, and then boom, we came down here and sat. So in terms of a buy side move, I do think pound has some upside potential. I definitely see that we could come back up into the range here. So I might have an opportunity in terms of a break right around here in the high 27s. Okay, so in the high 27s, we could probably catch something up into the 29s. So that's something I'll be looking for, especially if there's any kind of U.S. weakness. Then again, it'll play well for us on this end. If there's any U.S. weakness over there on the euro, then it's a breakout, and it just depends on how you want to play the breakout. Any U.S. weakness over there on the Aussie, not too much bang for your buck there as well. So for this Aussie NZD, I'm liking the Aussie NZD. I really want to get a trade in on this very, very soon, because I want to show you exactly what I meant by those two waves down. So you see the one wave down here where we've had a really huge sell-off, but this is just an intraday market structure here on the 4-hour. If I pull out a bit, what you'll notice is we also had this fairly substantial sell-off as well. And so if markets are just continuously testing this low here, if markets could just come right back up into this to this previous high, which is also just a retest of the 23.6 of this massive move. Okay, let me show you on the daily. Okay, so if the markets just come back up here and test this 23.6, then there's a lot of reward for that, right? Our risk is pretty tight, and our reward is 100% retracement of this original swing back up into the high, and then who knows, maybe we can go even further. So I might start sizing in on this Aussie NZD. Just depends on how market structure adds up. I'm going to look and see what we have during the overnight here later on today. But again, Aussie NZD for a buy for this week is also looking good. We're already getting a little bit of momentum, only up 17 pips thus far, so there's still definitely an opportunity to get in. We might have a little bit of an issue here at the 0440s, but I think we could easily break past that. So we'll see what we can get. I might start doing, if I'm going to size into it, just to let you guys know, I'm probably going to size into it probably at the 38.2. Okay, because if I can get a retest here at the 23.6, then that'd be nice. Maybe we can dip back under and then push higher. But if not, then I might start taking some size and scaling into this at this 38.2 here. Okay, so other than that, that's what we got, folks. Euro's kind of pushed away from me a bit. All right, I would have loved for it to kind of hang around and get some shitty Euro news, and then we could have easily broken the level here, but that's not what happened, right? So we have to wait till what Yellen says. She may cause a little bit of a pullback, but overall, I think all the volatility is just going to have the market whip around. We won't see the effects of what Yellen says probably until tomorrow, even the next day. Okay, things might take a little bit longer for markets to acclimate. Aussie, not too much there for me in terms of structure. It's decent. You know, I understand where we are in terms of levels, but we've kind of already had a little bit of a push higher. We were in on that buy, so that was a great opportunity there. But as of right now, do we have another buy side move? Potentially, there could be another buy side move on the break of this high here. But in terms of reward, I don't know if I really want to play in it. If we do get a break at the high and maybe we get a little bit more of some more consolidation in this zone here, then that will give me a little bit better, a little bit more confidence to start maybe taking this market back up in. I would like to see the market range here a little bit more. For the pound's actually very nice, right? I mean, we might be a little bit late on this pound. Would have been great to start taking buys down here at this structural low, because currently, you know, we're over 140 points away. And obviously, it would have been great to take it back up into the original structure here that was formed post that move. All right, so here, right? So it would have been a very easy move to take it right back up into the range. We know how price discovery works, but again, a little late for that, right? So as of right now, it's like, okay, can we have a continuation? If we do we take a breakout of the high here? Okay, because then if we can do that, if that's still feasible, then we could easily come up into these previous structures there. All right, so that's something that we could look for. And then Aussie NZD is really one of the best bets in terms of the way things look. I really do like the way things look. I think we are at a fairly substantial structural low where we might get a little bit more volatility back to the upside. Right? You guys see what I'm saying? It's not too bad. All right, so yeah, it could melt and break, and you know, we could see this thing crash and, you know, start pushing down to the down to parity. But at the end of the day, you know, I think if we do get a little bit more sideways action, well, then that means we're kind of getting in at the low, and we might have some more upside potential. Okay, so guys, cool. Your profit's my motive. Let's see what we get. Things are pretty clear in terms of levels that we want to start taking markets. And that's really just about it. So I'll keep you guys updated. All right, make sure you get in the live room so you can stay up to date with what's happening in terms of price action. Talk to you guys soon. Peace.